Hello guys, welcome back. Today is March the 10th, 2026, and the day 11, actual day 11 of gradually growing $100 to $1,000 using Forex or crypto statistical best trading approach. Right. So, as you can see, we are already floating on profit, right? Over $40 in profit, right? Close to $50 in profit, as you can see, and which is also 200 in terms of percentage. The profits we have made on this account, we have made 210%, right? Yes, 210%, above 210% on our account. So this is progress, right? This is massive progress. You can't get this type of results anyway. Tell you the truth. I'm telling you the fact. And remember, we don't trade every day. I told you many times that we as trader, we don't trade every time. We don't trade every day. So the opportunity is not there every day. Let me just be frank with you. So in case you are wondering or you want to take the course and you think this is an holy grail, this is, if you come to this system, you're going to be taking trade every day anyhow. No, you don't trade every day, right? We have systematic way of entering to a trade. We don't just take any trade any day, anytime we like, or trying to force any trade. If the opportunity is not there, we are not taking trade. 1 week, 1 day, 2 days, 3 days, we might not even take trade. But the remaining 2 days, we can take reasonable and quality trades. And this is the result. This is the result we usually get. We usually close on blues, right? On profit, right? And I also told you that it doesn't really matter the figure of the profit, right? It doesn't matter the figures, as long as we can add $1, right? As long as we can add $1 to our balance, that to me is profit. That to every of my students is profit, right? So that is the mindset I come into this industry with, and that is what I want you to understand, right? Coming to my channel, you have to understand that as a trader, you are an investor, right? So on this basis, I want to share something with you, then I will come back to the chart to show you the interpretation, right? So I'm going to be drawing on this chart. So the first thing I want you to put in your mind is that as a trader, right? As a trader, you are an investor. So I'm going to be saying best trading illustration onto best trading illustration, right? So best trading illustration. So the first thing you have to bear in mind is that you are an investor, right? An investor is someone who invests in land, let's say for example, in assets, crypto, over a long period of time. Now you are not thinking short term like every regular trader does, right? Every regular trader wants to make profit every single day, right? That is their mindset, right? But as an investor, you can think long term and still make profit in a day, in that same day, right? So not thinking like an investor in trading is putting your money, putting yourself at risk, right? So I'm going to be sharing with you some of my thoughts, right? What's brought about this idea and how I implement it. So you are an investor. So let's take the first example, which is, let's say you are an real estate investor. So you own a property in let's say Abuja. So you have a property in Abuja, for example. You own a property in Abuja, so that is the location. And okay, let me just quickly draw the house, right? So it's just a schematic of an house. Oh no, but you understand that this is how we used to draw house when we were in primary school, something like that. This is not lake, right? Let's take this as fence and the rest. So this is a mighty building, very large building, and well furnished. The inside is sweet, everything is perfect, right? This is your house, right? And let's say this is a story building, maybe 3-story building. We have an apartment here, then they run the first floor, right? So now you own this building, and instead of you living in the building, remember I said you are thinking like an investor. Now I want you to follow me keenly, then you understand what I'll say after now, because if you don't get this, you will not understand what I'm trying to explain to you here. Right? So you have this building, you own this building. So instead of living in this building, right, you decide to sell the house. Right? You decide to sell this building. So, but then as an investor, another way of selling a house is to rent it out. So instead of just outright selling of the house, right? Instead of actual selling of the house, you decide to rent the house to people, right? You rent the house to people. So since this is 3-story building, so you rent it to about 3 persons, right? 3 families, 3 persons, right? So every year you are taking a fee from them. You are taking rent fee from them. Remember, you are an investor, right? So instead of outright selling the building or selling the house or your building, you rent it out to 3 person. Now, after renting it out to 3 person, you then look for some other property that you can develop. Remember, you look for some other property that you can develop. Then, close to you, right? Close to you, you saw a building, a very small building, whose owner, right? The owner of the property doesn't have so much money to develop his property like you did, right? You now met the person. Okay, let me just quickly draw the building. So you have another building. Okay, let me change the color so it's not. So I have another building, right? It's a very smaller building, right? So this is a building. So you saw another building whose owner doesn't have so much to develop his or her building the way you did. So you met the person and told the person that you want to buy his property, you want to develop, like you want to buy his property, and you guys got to meet, you spoke, and you decide to sell his property to you, like the building to you instead. Remember, not everybody think like you do. Not everybody is an investor, but as long as you're in trading, you got to think like an investor. This person might not know, might not be a real estate person or investor. He might not even know much about business, but you do, right? So you met and he agreed, you bought the building. Now you see that, so let me just write it. You decide to buy this building. So you buy this building from the man, right? And then you developed it, right? You developed the house. So I'm going to be drawing a more bigger house. Okay. So this is even more bigger, right? Then you fenced it. Fenced this other one. So we have 2 buildings in the same location, right? So you have got 2 buildings in the same location. This time you made it 4-story building, right? So remember, this is your house. You every year you take rent. You take rent from these people. Let's say you take 30,000 from each of them. An example, 30,000 per person every year, right? So you now, and let's say you got this house from initially, you got it from this man for 90, okay, let's say 100, right? You got it from this person 100 initially, 100,000. 100, okay, this is $100,000. Okay, let me just quickly put the dollar sign. So you got this building from the smaller building before you renovated the building, before you start building the bigger mansion. So you got it for $100,000. Now, since you have renovated it and added so many features, of course, the building now worth more than what you got. If you bought it at 100,000, that means now that you have renovated it, it should worth, let's say $1 million, right? I say a million. Okay, 1 minute. Initially you got it for 100,000 and now it's worth 1 million. They are, remember, they are in the same location. Now I want you to get what I'm trying to do here. What I'm trying to say to you is, now both you are the owner of both houses right now as we speak. You are the owner of both houses. Now this first house, you rent it out, right? And you give it to people who pays 30,000 every year. Now maybe this is small also because I'm just using it and as example, but the figure doesn't really matter here, right? The money doesn't matter. But what matters here is that I am renting this house out in form of, I'm selling this house in form of rent, right? So I'm selling it in form of rent, and this other house, which is underdeveloped initially, I bought it, right? I bought this house, which is underdeveloped. Then after I've renovated it, and I'll decide to give it out again, right? You're an investor. You give it out again for people to rent this out, right? You rent. So you sell it by renting out. You rent again. So money keeps flowing in. You are still the owner of the properties. So anytime you want, you can decide to say, okay, tenants, I no longer need you. I no longer need you in the apartment. I want to either stay in the house or give it to some other person. So you have full ownership of the house. So this is the idea of pairs trading here, right? The idea is that you are selling, right? Remember, pairs trading is about buying and selling two assets, right? Two different assets. So you sold and you sold a developed house, right? You sold a developed house and you bought an underdeveloped house. So what is pairs trading? So pairs trading is the statistical, okay, let me just use the layman understanding, right? The simplest form, right? So pairs trading is the you buying and selling of two assets, two currency pairs, two crypto assets, two commodity assets, the buying and selling of two assets that are correlated and co-integrated. Now that co-integration is in capital letter, because without co-integration, pairs trading cannot happen. I take it again, without co-integration, pairs trading cannot happen, or pairs trading will result into loss. So you have to note that. So the buying, okay, let me define it in a way that will suit this illustration. So pairs trading is the buying of, okay, let's start with this one, because so pairs trading is the selling of an overperformer or of a developed asset, right? In this case, this one, right? The selling of a developed asset. Remember, I said selling is renting. So the renting of a developed asset and the buying of an undeveloped asset in order to make profit. So you sold this other one that is developed, right? I'm going to be writing it here. Developed house, right? You sold this developed house, and this other one that is undeveloped, you saw it and you took advantage of this house from someone close to you, right? You saw potential because this house are in the same location, just close to each other. That means the worth the same. So if you are taking a rent, if you are taking 30,000 from me, you can decide to take even more, but nothing less. So the buying of an asset or a building that is undeveloped, right? In this case, this one, the buying of a house or a building that is undeveloped, and the selling of a building, in this case, the renting of a building that is developed. So you make profit as a pairs trader. So the same thing also happens in the chart, right? The same thing happens in the chart. So let me just move away from this a little bit and explain to you. Okay, the same thing happens in the chart. So let's say, for example, we have this. I'll still come back to the chart later. So we have that. Then we have another pair. Okay, so that is another pair. So I decide to sell this. I'm selling this, right? Let's say in this case AUD, I mean GBP, GBP, AUD, right? GBP AUD and GBP NZD, GBP NZD, right? So I'm going to be using going serve as buy, right? So I now, due to the divergence in between them, so you need to understand how to calculate or determine if two pairs has diverged. You need to understand, you need to know, right? So that's why the course is important, right? um, so both of them has diverged. So this is the underperformer, because normally both assets should be moving in the same direction, because we can't trade anything that are not moving in the same direction. So we have to trade the ones that are always moving in the same direction. So normally they will move in the same direction, but occasionally, sometimes these two assets that usually move in the same direction will not move. Yes, they will not move in the same direction. So that is where we take advantage of those opportunity as best traders. We take advantage of those opportunity to to capitalize on the divergence, the short-term deviation of these two assets. So that's why I would say this is divergent. You've seen me many times will say I will do something like this. So this is divergent, H1, right? So this is divergent. So H is the divergent. So I'm going to be buying GBP NZD. So GBP NZD in this case is our underdeveloped asset, which is the house that we bought, right? So I'm going to be selling GBP AUD. So GBP AUD is the house that we rented out, right? So as you can see that the results of this will eventually give us profit as best trader. So in the illustration I gave, you will see that um, the both in both cases or this type of trade, we will close or almost close on profit on both sides, because the underdeveloped asset that we later we are not developing now will eventually be generating rent every single year for us. Whereas the other one, the first house, which is the developed house, which we rented out, will also be giving us profit. So it's more like profit on both sides. I am sure that you get what I'm saying. But if you have not gotten what I'm saying yet, I'm going to be repeating for the second time, right? On the last time. So the first thing I'm saying is that GBP NZA, we are buying GBP NZA. So GBP NZA in this case is the underdeveloped asset, which is the land that we bought, right? The land, the property that we bought, which is underdeveloped, and we've renovated it, and we now is now renovated. We can now rent it out. So we rented it out. We can make profit on the rent. But GBP NZD was the one that we um GBP AUD rather GBP AUD was the one that we owned initially before buying the other one. So we are making profit on both sides. So it is important to know when to take this trade, right? If not, the trade will keep diverging, will keep moving apart for a very long time. So that's why the course is important. You need to know when exactly you are going to take those trades, sell AUD, sell GBP AUD and buy GBP NZD. It's very important to know when exactly to do that. So there are a lot of calculations, there are the calculations that we'll usually do to be able to determine the windows of time, right, to take advantage of this opportunity. So time for us as traders or best trader, time is not a factor. Like, we don't time the market, but the timing in the market is much more important to us. I take it again. We don't time the market as directional traders, but the timing in the market is what is more important to us. So if you want to learn more about this method of trading, there's a course on this, and I teach a step-by-step guide on how you can actually calculate this yourself and do it the way I am doing it, right? So that is all. The video is already too long, and I don't want it to be more than this. um I don't want it to be more than this. So I'll be closing the trade, right? I'll be closing the trade now, and I'll be talking to you later when I will be taking another trade. So if you have not yet subscribed to my channel, you can do well to subscribe now. If this is the first time, or if you have been watching my videos for a very long time and you have not yet subscribed, do well to subscribe to this channel, right? So as trader, remember one thing: as trader, you must think as an investor. If you don't think like an investor as a trader, your trading account, it has risk. I'll talk to you later. Until then, bye.